to the Galaxy Towers Condominium Association budget presentation of the 2014 audited financial statement and the unaudited financial report for the first 6 months of 2015. Chairman, if you're back there, can you lower this down just a little bit? It's a little bit high. Thank you. The audited financial statement was posted on the Galaxy Condo Cafe website, as well as on Connect, and a link to the document was provided in last week's weekly update. There are also hard copies in the back of the room on the bar of both the audited financial statement and the unaudited report for the first 6 months of 2015. It is now about 10 minutes after 8, and we'll start the meeting. My name is Frank Fittipaldi. I'm the General Manager, and I've been designated to conduct the meeting this evening. Before we begin, please turn off any cell phones or put them on silent mode, if you would. We have two presentations this evening. The first, as I said, is the 2014 audited financial statement. Will be presented by Mr. Neil Delatoro, who's standing here at the podium of Becker, Delatoro, Gitto and Company, Certified Public Accountants. His associate, Tahir Qadir, sitting at the table here. And following that presentation, which will last about 20 minutes, there'll be a brief question and answer period regarding the audited financial statement only. So we'll take questions from the audience directed to either Ms. Del Toro or the treasurer sitting to my left, Joe Purcell, treasurer of the Galaxy Towers Condominium Association and director. To his left is Tom Fierro of Cipolla Accounting, and to his left at the end of the table, Mr. Joe Cipolla of Cipolla Accounting. So with that, I'll turn the chair over to Mr. Delatoro. You're up.
Thank you, Frank. First check. Can you hear me in the back?
No, I don't see.
Can you hear me now?
That's
you hear me in the back? Okay. Well, thank you for the introduction, Frank. And pleasure to be here tonight to review our role as your independent accountants over the financial statements. What we're going to do is do a walkthrough of the audited financial statements, starting with the accountant's opinion, and then hit some highlights, in particular the repair and replacement fund. Spend a little bit extra time on that tonight. First of all, the financial statements are the responsibility of management, and what we do as independent accountants is to attain reasonable assurance that the financial statements are free of material error. And by that, we don't opine on the financial statements being exact. Just as a rule of thumb, they have to be accurate. Generally, within 5% or better, depending on the circumstances. Now, as far as our opinion goes, as I mentioned, it starts out with the responsibility of management for fair presentation. What we do is plan the audit to start. We get preliminary numbers as represented by management and the treasurer. And then we review the system of internal control for the purposes of detecting any weaknesses that would cause the numbers to be misstated. And I'm pleased to report that we did not find any material weaknesses to the system of internal control. We also meet with the board of directors, and we discuss with them what our audit approach is. And so as I mentioned, it's not a full study of the internal controls. It's only a study of internal controls for the purpose of opining on financial statements. Definition of internal controls, what does that mean? Okay? Those procedures that are performed here at the Galaxy that promote the accuracy of the reporting and also safeguard assets. And We also opine on the supplementary information that is provided us by management. We just review that for reasonableness, and that would be the repairs and replacement fund. And now we're going to get into the basic financial statements, starting with the balance sheet. As those of you with any kind of accounting background know that a balance sheet is a statement of financial position at a point in time. It has your assets, what's owned. So in this case, it's cash. At the end of the year, you had $773,000 in operating funds, and the replacement funds had $4.6 million, also known as a replacement and repair fund. You had in escrow cash $1.5 million, but notice that that money is also due back to the property owners here. So you'll see on the liability side about that same number of $1.5 million. Then we have accounts receivables, mostly from December of 2004. That's also aged. And those are the major assets. Then on the liability side, you have accounts payable, prepaid assessments, those who pay in advance, that would be. And then because of the transaction with antenna sale, around $600,000, there's taxes owed of $200,000. Just to give you a flavor of the audit, what we do with cash is we confirm it directly with the banks. And then we review the bank reconciliation. For receivables, we will look at the aging of the receivables and also confirm some. If anyone's not paying their bills, that would go to a law firm who follows up, and we look at their reports and what they have to say about the collectability of it. So there's a valuation allowance against those receivables that may not or deemed in doubt for collection. As far as accounts payable and accrued expenses, what we'll do is look at payments that were made in 2015 to see if those costs were actually incurred in 2014. If they were, we check to make sure they're on the payable list. If they weren't, then we'll make sure that they're excluded. It's called a search for unrecorded liabilities. And so again, the balance sheet is a statement of your financial position at a point in time, and of course in this case it's December 31, 2014. Okay, moving on to the statement of income, or revenue, called a statement of revenue and expenses, and change in fund balances. Of course, you know here that you're charged a monthly assessment, about 1,000 units. I think the average is around $1,400 a month. So that revenue recognition is fairly straightforward in that, you know, there's a finite number of units, finite amount of space, there's a rate that's charged per unit owner, and that's what's recorded as revenue. That's why you'll notice towards the end of the presentation that that's almost spot on budget, as you can appreciate. And then there are the expenses, starting with administration, general operations. The largest one for $4.4 million would be the residential operations. And I'm not going to have time to go through every detail of all your expenses, but the financial statements are also detailed by much more granularly in the supplemental information, you know, for review and full disclosure to the owners of Galaxy. All right, so just the statement of revenue and expenses obviously is something where it covers a period of time. The balance sheet is a snapshot of a period of time. The operations are for the year ended, 12 months ended December 31, 2014. Then we get to the statement of cash flows, which takes the excess of revenue over expenses, which from the statement of operations is $186,000. So the Galaxy, from an operational standpoint, is in the black. As well as having built up the replacement and repair funds from $2.3 million at the beginning of the year to $4.6 million at the end of the year. This is a little bit more of a technical kind of statement, which just takes the results of the operations on an accrual basis and converts it to the change of cash. The other thing I want to highlight, going back to the balance sheet, is that the Galaxy does not have bank debt. You know, a lot of organizations of this kind carry, debt burden, and you're one of the exceptions that does not have bank debt for service.
Is that a good thing or a bad thing?
That could be a matter of opinion. I can just tell you that from what we're opining on, you don't have debt. That's a discussion that's always bandied about with boards. But if you want my personal opinion, it's a good thing. Okay, the next section is the footnotes to the financial statements. Under generally accepted accounting principles, there are disclosures that have been deemed necessary for you as the reader to better understand the financial statements. I think a lot of you can read through them or go through them quickly. It goes over the nature of the organization. I think you all know what the organization is, a summary of significant accounting policies. And it starts out with estimates because certain numbers in the financial statements are not absolute. It requires judgment on the part of management, and as the independent accountants, we review their judgment for reasonableness, again, to make sure that your financial statements are free of material error. You operate under fund accounting. Now, what does that mean? There are two main funds here. One is the operations for the day-to-day, year-to-year running of the Galaxy. And the second one is the replacement and repair fund, so that in this case, the funds are there when something that's existing, a roof, a generator, the hallways, need to be replaced or repaired. And I'm going to talk more about that towards the end of the presentation. This has been, in my opinion, vast improvement in that area over the last 2 years here at Galaxy. We mentioned that cash is held in bank deposits that may exceed federally insured limits, and I know that can raise a concern to people. And I got to tell you, from an audit perspective, we put risks on various accounts for testing, and based on historical results, we see that as a low risk. But then again, we don't predict the future and what can happen in the banking world tomorrow. Okay, let's go to the further notes. This just goes over the monthly maintenance, receivables, the investment income earned. You have very little inventory, although it's required to be disclosed. There are contingencies. Years ago, there was a settlement with the union which created a pension debt that has to be serviced now. I think it's about another 12 years left. And it gets paid out at around $83,000 a year. The interest rate, I think it's around 6%, almost 7%. And then we talked about the escrow deposits. People make their deposits when they come here, and it's due back to them, so that's an offset on the balance sheet. And then income taxes were significantly higher this year because we had revenue from the antenna, and as you may have seen and read the financial statements, that was income of about $600,000, of which there was a tax charge of $200, and the approximate net of $400 by direction of your board of directors was moved from operations into the maintenance and the replacement repair fund. And there were no subsequent events. And now we'll move on to the supplementary information. Again, all the details of the operations that ties right back to the main income statement, statement of revenues and expenses is all there. In fact, it's compared to budget. And we just agreed the budget to the amounts. We do make some inquiries about over and under as part of the audit. Here's a schedule I think represents the greatest improvement over the last 2 years at Galaxy. If you think about it, the board of directors has an impact on $300 million of value here. It's $300 million. How did I get that number? Let's say that the average unit here is valued at $300,000. You have 1,000 of them. That's $300 million. And the main commission of the board is to maintain the common property. They don't maintain your individual units, but they maintain what happens once you walk out your door and once you walk in the front door. And now the board, and I like the way Joe Purcell put it, has a living document. It's not just something that's on a piece of paper. It's a living document that has identified everything in the building that is subject to repair and replacement. And everything that's subject to repair and replacement goes into this schedule, and it comes out to total about $50 million. So it takes $50 million to repair and replace everything subject to repair and replacement in the Galaxy. Now, it might sound like a huge number, but if you put the roof on last year, and let's say that was $700,000, that's still in the schedule, even though you won't need it again for 25 years. But it's in consideration for repair and replacement. And this particular schedule also breaks it out by the estimated useful life. So some things like operating equipment could be 1 to 5 years. And as mentioned, something like a roof would probably fall into the 1 to 20 or 25 years. So it's a living schedule in that it's continuously reviewing what it would cost to replace everything today. And it's certainly an estimate. No one knows for sure. And this is in your financial statements because it's required by generally accepted accounting principles. And under the generally accepted accounting principle rules, we don't need engineers or architects that come up with this number, although sometimes that's, in the judgment of management, would be helpful. But the people who do the maintenance and repairs, some outside contractors can give estimates. So you keep, again, I like the word living document moving, because again, it's not just financial, it's also physical. Because when you're talking about the $300 million, okay, how your home surrounds are maintained by way of replacement and repair has an impact. I think that's also a matter of common sense. Now this is something that has come about mostly in the last 2 years. If you go back 3 years ago, it really wasn't in your financials. And again, it's management's financial statements, and that's one thing I got to say that I greatly applaud, and hopefully you see great results for that in the years to come. So without debt, with a buildup of $4.6 million in repairs and maintenance, and I also, in conversation with Joe Purcell, heard that you're getting top-notch architectural firms, design firms, to maybe make the place look like the Trump Towers. But that's something, just as an outsider observing, as well as being an accountant, has had, I think, a positive impact, certainly on the financial statements, and hopefully something you can see for years to come. Okay, did I use up my 20 minutes? Okay, I'd be happy to answer any questions you have. Yes, Jason.
How you doing? My name is Justin Rack.
Justin,
I'm on the board of directors. Could you explain to the homeowners what an unqualified or qualified opinion is?
Oh, that's a good one. I should have mentioned at the beginning. A qualified opinion means that we found something in the audit that caused us to not be able to say that your financials are free of material error or otherwise are incorrect. The opinion that you received from our firm is unqualified, and that is the best opinion.
And can you explain to the homeowners what the difference, how a bank would look at that towards a mortgage?
Absolutely. Well, not just a bank. I mean, if someone came in here and picked up your financial statements and wanted to know about your unit, an unqualified opinion is the best opinion. Yes?
My name is Ms. Tonza, and I'm house 328. I was looking in the financial statement notes and may have missed something. I do not see anything that you write about the mall owing the GTCA any money. Could you please explain, because this, what they owe us, is a substantial number. And I have something after this to explain to you something else.
That's a good question.
So could you repeat the question?
I
Make
want
sure
to
you
know
understand.
why it wasn't.
I was going to ask Neil to repeat it so everyone can hear it.
Oh, I'm sorry.
Make sure he understands you too.
Okay.
The question is, why isn't the mall receivable?
Why the mall owes us money, correct, from the parking? This amount, it isn't shown to us at all, and I couldn't see. So could you explain to me why?
Well, that would be part of receivables to the extent it's still collectible.
But any money that is missing from the galaxy, excuse me, let me finish my question. You do this meeting for
And
me,
interrupt.
and I want to talk. We want to know exactly anybody. Like you once a month tell people that the X amount of money they owe us, and we pay about 5%, correct? Those people who don't pay the monthly maintenance. Now, if the mall owes money, shouldn't we know how much money they owe? Because in the big scheme of things, I pay for this. It's my money. So why can I see, maybe I didn't look right, why can I see exactly how much the mall owes?
Well, keep in mind the financial statements are a summary. You don't see every receivable from every person
But
here.
this is money that I paid, and I don't care. Always it was how much the mall owed.
No, it's a very valid question, and your concern is that that money is being reflected in the financial statements somewhere.
Right.
What I'm saying, our understanding is it's part of receivable if deemed to be collectible. But it would still be on the books and records being
But
collected.
it doesn't matter, but I want to see. I am okay that you see and the policy. Why me? That means that all this financial statement doesn't present for us a true picture. Okay? If you don't show me the any I don't want you to tell me that you will do 48 million. From where did you take those money that you will do for us 48 million and everything is handy-dory? I want to see.
Well, I'm sure anything
and you
my
say
understanding is
major
anything,
things and
my understanding is that anything you want to see at the Galaxy is available. I don't know anything that's not completely open. It just might not appear in the detail you might have wanted in the financial statements because the financial statements don't serve that purpose.
No, okay.
Joe, go ahead.
I was just going to say, from an audit perspective and what the purpose of audited financial statements are, you're representing what the account receivable balance is for the Galaxy Towers Condo Association. The mall and homeowners are both part of the Galaxy Tower Condo Association. And that balance is $489,000 less net allowance of $3.8. There is no disclosure that needs, it's approximately, and we all know in this room, Feeny, that it's approximately $200,000 that the mall owes for parking, and that is part of the net receivable less the allowance for a doubtful account. From an audited financial perspective, to break out the mall, which is $200,000 of a net of $3.8 million, isn't needed for banks and or financial users. In part of, suppose in our internal accounting department, they break out what is the mall receivable versus the owner receivable.
Wouldn't it look better for us if we had the transparency?
Oh, excuse me, one at a time, please. Feeny, will you finish the other part of your
Yes,
question if you need to?
Still, I cannot, I wanted only to see on which page you put it, so I know that everything, it is perfect. I didn't see it, I went through it.
Are you questioning the accounts receivable balance?
No, I
Is that what
think,
you're
where
questioning?
can I see the $200,000?
It's better, it's baked in.
It's in the books and records. And this is a summary of the books and records.
From an accounting perspective of a high-level audit, again, in the past, when I looked at the audited financial statements, this is what you're disclosing to banks that want to give loans, and it's what you're disclosing to potential buyers. You give the needed, required information as required by GAAP.
Okay, you want by GAAP, but for me, for us, lens in accounting.
Oh, can you send it to me?
Why wouldn't it be
Just send
a
it.
line to say the mall owes us so?
This is
you know
exactly what's disclosed. This is disclosed in the internal financial
Right, it's in the
statement.
internal
In accounting,
financial
there's internal and there's external, and what external is provided by GAAP. What Neil's firm is presented is what is provided by GAAP. When you give too much information on the external audited, it's going to get cumbersome and it's going to get crazy. That is exactly why there is GAAP, and that's
This money
exactly why
has to be
every...
collected,
If you want to
right?
speak over me, that's fine. Go ahead.
No, I want to, this money has somehow to be collected, correct?
Are you stating that the external audited financial statements are incorrect?
No, I am not stating that. I didn't say. I said I want to be clear for me, for mom. I pay a lot of money every month. And this is a meeting that I can ask all my questions that is not clear for me. I am not saying that he didn't do his job or you didn't do your job, but I am entitled to know where it is. I, by mistake, I know, because I am long time in the Galaxy, that the mall always owes us a lot of money. In my time, $800,000 or $850.
Over $1 million.
Okay, here
correct.
it is.
When you were on the board, it was over $1 million.
Okay,
Correct.
okay. Say they went into bankruptcy, it is not because I was on the board.
I'm not saying it was because you were on the board at all. I'm saying
Okay,
this
so
is the
let's
history of
put
what
it
it
how
was.
it is, Joe. So, this is why it's my concern, because they owe us for 40 years money, and this money, we always forgive them.
So you're saying you
Something
want to see
that
$200,000, a line item breakout of $200,000 in the audited financial statement. If you're not saying that, I'm not sure what you're
Okay, can we
asking.
go on to other questions? Maybe other people have questions. Yes?
On this line, wouldn't it look better for us if we did break that out, have the transparency where the garage is showing 207, so somebody who might be looking at our financials, who might want to buy, understands we have less homeowner deadbeats, all right? Because that's 1/3 of what's due, correct? If there's 600,000 and the mall owes 200,000, that means we, the owners, are responsible for 400. So could we have that transparency with the breakout, 2 line items?
We could consider that in future audits. If that's something that you want to do supplementarily, we go as directed by the board. If the board wants that broken out supplementarily for that purpose, we'd be happy to do it.
Well, can I ask the owners in this room, would you rather see the line breakout, or you
No, you can't ask
No,
the,
it's not
excuse
done.
me,
It's not
excuse me,
done.
point of order, excuse me. The auditor's here to answer your questions regarding the audit of your financials for last year. So this is not a forum for taking polls, and please direct your questions to the auditor. His presentation is over. We'll next go to the presentation of the year-to-date financials for 2015. So please limit your questions to that for the auditor. So we're not going to take a poll of unit owners and what their opinions are. It's not appropriate, it's not fair to the auditors, and please direct your questions to him regarding the audit, and then we'll move on to the other
By the way,
financials.
just if I may interject there, I'm sure if you sent Joe an email and made that request, it would be considered. I don't see any problem with it.
Thank you.
Yes.
I have a question. I noticed in here the antenna, the sale of the antenna.
Yes.
100 years, 99 years. And we paid I saw the 203,000 tax liability, which I know from the antenna, we discussed it during the budget meeting. So the antenna sale was 565 gross, but it had a 203,000 tax liability, which netted the income over 100 years to 365. I noticed that you have that moved to the replacement fund as a transfer, but I don't notice it anywhere initially as it being in the operating fund. So when the income, it was income. And someone gives us a $565,000 check. We sold them the antenna, okay? It's income to the operating fund. But how was that treated? Was that considered income to the operating fund? Because I don't see it listed anywhere here. I don't see a $565,000 income check into the Galaxy.
Well, the check did come in,
Yeah, I know.
and originally it was considered, when we go to the audit, considered to be, as you say, operating income. And then by action of the board of directors, they authorized it to be moved into the repair.
Net of the tax liability.
Correct.
Okay,
Correct.
so I understand that. After, so I give you a check, you cash it, you hold it for a month or two, and then you say, hell, you know, the net I'm going to transfer into my other pocket. I understand that. But the income was to the operating fund. I don't see, I mean, maybe I'm just not understanding.
Well, it comes in and it goes right back out, and nets to zero in the operating
But it was
fund.
income, don't we have to report it as income to the operating fund? I mean, we pay taxes on it.
Well, that's right. Tax
So-
purposes you do.
Well, so then the income, it was 565 gross, and net income is 365,000 to the operating fund. Regardless of what pocket you later put it to, it's income to the operating fund. I don't see it as an in to then be an out. I just see it as an out. You have 365,000 transferred over, when it was months after it came in, I don't know, it was in the, to the replacement fund, but not, well, excuse me, sir, I'm sorry, I don't know your name, I came in a little bit. Neil, sorry. I don't show it as income, and I want to know where it is listed as the 565,000 money coming in, which you pay 203 on tax, and you have a net of 365, and then you decide to give it as a gift to R&R. I get that. You don't show it as income, so you pay tax in it, and I want to know if that, which I can't find here, if that wasn't considered income, with the bottom line net positive to the income operating fund, be lower. Would it be different?
Nope. The operating fund would not be different.
So where is the income?
Well, the net, well, when you look at fund balance, the fund balance did go up by approximately $400,000, it's called 600, netted by 200. And you'll see that the repair replacement fund went up by that amount. But
I know we
obviously,
moved it
the
on.
repair fund can't collect the money and pay the money back out.
Where's the income taken? To what account? If
If
I have money and I give it to Joe, I'm taking the income. I then write him a check. I give it as a gift, or then he takes it as income. It's not the same, it's simple.
I can answer this, you said no. So, if we included the income in the operating fund, and then include the income in the R&R fund, we'd be double counting.
No, you
What
would
the
show it
board
as a
approved to
negative
do-
transfer.
What the board approved to do was to include the entire transaction into the R&R. So that's where the net, approximately $400,000, you're seeing net positive in the R&R. If we would have included the revenue in the operating fund, then we could have stripped it out. It would still net to zero. So we could have showed $600,000 in, $600,000 out, antenna revenue. In that line item, we would have seen zero.
Why didn't you?
Then the tax.
Why didn't you?
We very. It,
We have
I'm
the
sure the
tax
account.
on it.
I'm sure the accounting. When you consolidate the accounting, you're not going to see that entry. The antenna line is the antenna line. The tax line is the tax line. So let's break this down for homeowners. If I were to book that entry, I would debit I would credit my revenue, debit my cash, then my cash is in. Now I would net that out and move it to the R&R. It would show as a zero. You're not going to see each and every line item. You're seeing the net impact. So the net impact to the operating fund is zero. The money came in, the revenue came in, the revenue moved over. The tax liability came in, the tax liability moved over. It's clearly stated in the R&R that the net impact to the R&R was approximately a positive $400,000.
I understand the 565 in, the 203 out, and 365 transfers equals.
So what is your question?
The question is, it was taken as income to the op fund, which is why we had to pay taxes.
The board.
Don't you think it would be a little bit, this isn't a math question I'm asking you, so you don't have to answer, or an accounting question. Don't you think, based on, I came in late, I understand what Ms. Johnson was asking. Don't you think it would be a little bit more transparent, even on the 203, even on the tax liability line? I know that tax liability was for the budget, for the antenna. Does it say here that tax liability is for the antenna? Does everyone in this condo know that that tax liability was for the 565 that we sold the antenna for 100,000 years? I'm talking about, yes, this is a special once in a blue moon transaction, not an everyday thing. Why couldn't it be open and transparent?
Again, I will go back to the audited financial statements with regard to GAAP. They're showing a net $400,000 impact to the R&R. The board approved that the transaction would be part of the R&R. If you want to start making notes to the financials that disclose.
Well, actually, there is a note. There is a note. There's a note 8. It says, by board designation, $365,835 received during 2014 for antenna revenue, net of taxes less.
Does it say the original? It says,
yes.
It says how much the taxes were?
Transferred from the operating fund to the replacement fund. So it's not only in the face of the financial statements, it's also on the.
But in the notes, it says this. 365. Does it say that it was originally 565 and 203 was taxable? Would we pay taxes of 203,000? My point is.
Well, that can be derived because in the income statement note, we explain that too.
I know, Neil, it could be derived, but not everyone understands and reads through these things. I feel it's important to have notes to explain things. I knew the tax liability was solely based on that. 99% of the rest of the people here didn't. It's just a matter, and the same thing with what Finney said before. In the previous years, I was on the board too. I know what GAAP standards are, but we had a multitude of notes, so owners could understand it, and excuse me, potential buyers. It should be clear. No one should have to sit with a pencil.
Well, I'm telling you, I think that these footnotes, as worked on with the board, are concise. They are in accordance with general accepted accounting principle,
I don't think
and they don't burden the reader. They don't mention debt from like 8 years ago. It's just what happened in 2014.
Every board member had the financials and had the opportunity to give comments. No board members made with comments, and I'm not speaking to you, but let me tell you this. When I looked at the old audited financial statements, you're disclosing the dirty laundry of the galaxy, which is for internal purposes. I'm not talking about this. I'm talking about the disclaimer.
What about the mall? Why not have them all in a note for potential
I'm sorry,
buyers?
go ahead.
Financial statements. It's not dirty laundry. That the more you can make that a note, ask it wherever you want to on the mathematical page, on the
And again,
well, let me go back to our roles. Let me go back.
Wait. Joe Purcell said that, I took a note. Joe Purcell said to Finney that the mall is considered doubtful accounts. He's not sure we'll get paid that 200,000+. Well, then you make a note and say the mall owes us over $200,000 in parking fees. If you want to consider it doubtful, if the board made that determination, or you, the auditor, made that determination, then you ask them and put it in a note.
In all due respect, let's go back.
It's done before.
Let's go back to the roles here, okay? We are the independent accountants, and we opine on the financial statements prepared by management. In our opinion, the financial statements fairly represent, without material error, the financial condition, the operations, the cash flows, and the footnotes. Now, having said that, okay, there are judgments made by management as to what is disclosed, and we certainly feel, and we have opined, that the disclosure is in compliance with joint accepted accounting principles, it's reasonable, and you might have another way that you would have done it, which would also be correct, but the way that management has presented the financial statements are fairly stated. There's not a material error here.
I didn't say there was. You don't get to you don't get to make a determination and say, I think we
Absolutely
should
not.
disclose this.
We could take exception to it. And
Management
oftentimes,
decides what gets disclosed in these, not the auditor.
we opine on what they're disclosing.
So you
And I can tell you, a point on
suggest
here,
that they could say,
this is
"You
fairly
can't finish."
presented. Yeah, this is fairly presented. Now, in all due respect to you, could there, in someone's opinion here, be a better way to do it? Of course.
Well,
You're
that's
entitled
what
to your
we should
opinion.
have. That's
You're
what
entitled to your
We
opinion.
should have the best way for
and I will
everybody.
say-
And I think that that's what the board had in mind. I don't know that they had
It's
everything
not,
the
there's
rest
so
of
many
it.
things hidden in here.
I will say clearly, there's
They're all.
a very different reason why there are internal financials and there are external financials. And internally, you can disclose more. Externally, you provide by GAAP. If you want potential buyers and potential banks giving loans to see long, detailed, drawn-out notes that take pages and pages. I mean, when I came on the board in 2012, there was a novel written about the board of directors suing the board of directors
There was a
and the
line
building
that-
not knowing who's on the board.
But we
If
don't
you're-
have that
Gail,
now,
you can
so
speak
you want to
over me.
lie to a bank?
Go ahead, Gail.
Well,
No, you
let's-
opined
let's
about
go- let's go
nonsense
back.
2 years ago. Let's talk about now.
No, let's go back to the big picture.
I'm talking about cleaning up the notes to the financials and the disclosure that the end user needs. The board is not, the board has built with the new accounting firm a very robust package of accounting and detailed accounting of everything from every check that is cut on a monthly basis, so there's transparency for the homeowners, and these are normally on a recurring basis put out at least by the 20th of the month. When I first got on the board, it was pulling teeth to get financial statements. Now we're giving it, and you can make your violin song because you're not on camera all you want, Gail, and I'm okay with
We've
it.
always complained. Let's talk about
I don't
this.
understand how
Thank
you
you very
complaining.
much.
Go forward, not backwards. Go
Anybody else have a question?
Joe, we are here to be nice.
Let's
with
move
our
on.
money.
Let's have order, please.
Stop it with this. This is not nice what you are doing. We are all owners and you should be respectful at least and answer. It's the money. It's nothing personal. It's show me where it is. I don't have a
Okay,
problem.
there's a young lady in the back here, been waiting to ask a question for about 10 minutes. Please yield the floor and let's move on.
Hi, my name is Gina Riggi. I've been a resident for 25 years. I own a couple of apartments here. I think it's a fine document. I think it's a fine job. I also think if you talk about internal audit practices as opposed to GAAP, and I'm very happy we have a full-fledged GAAP document here, but it is a homeowners meeting also. And I think just like when you go to a congressional site and they have the congressional bill, and then they have the button where you can press in plain talk. Well, I think perhaps you should consider having an internal audit meeting. And the mall has been a thorn in our side for the 25 years I've lived here. It has been not fully disclosed. We have been carrying the burden of the mall, and people are extremely frustrated. So if you had your internal audit meeting and you had, the notes are good, but if you had the notes that were a little more thorough for us that we could just have among ourselves, I think people would be less frustrated. It's a frustration level, especially among the old-time people that have lived here for years. The mall has always just been carried on our shoulders, and we have never had full transparency on the mall. That's all I want to say.
Okay, thank you. Next question? In the back?
Hi, people are talking about transparency and how much the mall owes us, and Joe was pointing to the internal and the external. Can someone clarify if the internal financial documents that are disclosed every single month to all the owners, doesn't that reflect the exact amount that the mall owes us? And saying mall owes us for parking and says exact amount.
Yes, it does.
Other questions for Mr. Del Toro?
Well, I want.
Yes, Feeny?
Okay, I want your opinion, please. I do not think that is wise. A lot of homeowners are speaking to me, and this is why I am asking you this. They don't think that it's wise to keep all our money in one bank, which is Banco Popular, right? I was on the board 6 years, and therefore I know it's the board fiduciary responsibility to be cautious with our reserves. What will you recommend for our board?
Well, again, our role here was to disclose that, as you see in the footnotes, some of the funds are in banks in excess of the federal guarantee limit. And I think that that's something that the board does address from a product perspective. My years of Price Waterhouse and my years doing thousands of audits up to this point, we've never had an issue with it personally, but I agree with you. We don't know what's going to be happening tomorrow.
So what will you suggest to the board to do with our money, that all our money is...
Well, we have one blanket suggestion for the board, okay?
Why would
Do whatever the board believes is most prudent as stewards of the Galaxy's finances. And that's just a broad recommendation where it's at. And I think the people there have good judgment.
You know how I feel when you stay in front of us and you left there. I live here for 18 years and I pay a lot of money and I care a lot about the Galaxy. And you staying there, I came here to speak about our financial. And I would be really very pleased. You are 3 years on the board. You should speak about what you do or what you don't do to us. You take this previously. Remember, there are 1,100 apartments in the Galaxy, approximately 3,000 people, right?
Is there a question?
And I want you to be respectful, as usually, to everybody, not with those who agree or disagree. I didn't come here to fight. I want to.
Is there a question here somewhere?
No, but because he's laughing all the time.
I'm smiling. I'm happy that there's owner participation, so I'm smiling.
The auditing firm is here for the first part of the presentation, and if there's no other questions for the auditor, we're going to excuse Mr. Del Toro. So, young lady in the front here.
My name is Selam Erkan. I live in Tower 2 and I've been a homeowner for 12 years. You earlier mentioned that Galaxy's debt level is really low, and in your personal view it was a good thing. Assuming that every homeowner in this complex is concerned about the value of their homes, what is your expert opinion about Galaxy's financial statements compared to the other high-rises or other complexes in the area? What are the weaknesses and what are the strengths, and what should be done to improve in terms of financial statements, which will reflect to the value of the
Well, I think I touched upon that. As all of us know with real estate, it's very common knowledge that how it's maintained, the repairs, the replacement are paramount. I think that goes across all real estate ownerships. I think we've all been to people's homes where they have put it nicely deferred their maintenance, and it's not as appealing as it could be. I think great strides have been made here by, again, identifying what physically has to be maintained in your building. When you walk in here, you walk out your door, I think you want it to be aesthetically pleasing, you want it to be safe, you want it to be comfortable, it's where you live. Okay? So what management has done over the last 2 years is to develop a list of everything physically that would be subject to replacement and repair. And what they've also done is start to build a fund and a program to make sure that it gets maintained with the proper prudence and with the right financial backing. So how it's financed is a matter of opinion of the board and those in charge of stewardship. It's always nice to start out without debt. So it's not like you're digging out of a hole. You have $4.6 million to go forward. And again, we talk about the mall. It's certainly a concern of everybody. It didn't go as well as we wished. Certainly, everyone's entitled to feel aggravated and frustrated about that. Okay, we talked about, maybe some of the accounting for the antenna. But first and foremost, in the big, let's call it the big, beautiful picture, there's $300 million of value behind all the doors here. And I think the Galaxy's made great strides, you asked my opinion about this, made great strides to identify at least the components that must be addressed on a regular basis physically, and they've addressed what they plan on spending each year and what they plan to build up as reserve funds going forward. So I think that's, in my opinion, an overriding positive for everyone. I mean, there's certainly aggravation and frustration about the mall, there's certain aggravation and frustration. Yes?
May I just ask a question, because I have been away from here for a little bit. How long have you been our independent accountant? I like you very much, but how long have you been doing that?
We've been here for 2 years. We handle many industries.
I'm not even questioning your background. You seem very good at what you do.
Thank you.
I just want to say that I think part of the reason people here can become frustrated is we were $25 million in debt, which I don't know if you know about that. And we all had to have a large maintenance increase. We paid that off. But we're just concerned because, we feel like there should be some explanation at times for us, because we do not want to get into that predicament again.
Well, I think Joe put it perfectly. That is not in your financial statements. Anyone who's looking at your financial statements, in my opinion, sees an entity that has a positive operating result, $180,000, as a positive cash flow, makes a lot of people happy, positive cash flow, has a vision by way of identifying, it's not just a schedule that someone slapped on the back of a financial statement. It's a vision that the physical component parts must be repaired and replaced. And I think we can all agree, preserve your value. Yes?
Just go back to a question that I heard about having all the money in one bank, and you said you left it up to the board to decide.
Well, we don't decide anything. We just disclose that it's exposed.
Well, if it were your money, if you had $10 million, would you put it all in one bank, which was insured up to $100,000? What would you do?
Well, I've done it where it hasn't been insured for over 100,000, so that might be a bad example. Thinking about it, again, we haven't seen there'll be a problem. We can't speak to tomorrow. We only know, historically, it's not been deemed to be a major risk. Maybe a few years ago, could have raised some eyebrows.
And this bank is where? What is this bank?
Bank of Popular.
It's Popular.
It's local. Popular Bank.
It's local.
Well, this is a good thing. I'm sure the board is going to take this under, probably more serious consideration. Again, it hasn't affected our audit opinion. We disclosed it, and again, when Tahir and I look at the risk for each account, it's not something to say, there's a high risk here. It's still considered to be a low risk from an audit perspective. It's a judgmental call, but yes.
Okay, so what I'm getting from you, I want to ask my question, but what I'm getting from you is it's not your judgmental call, it's the board's call. You're just going over the audited financials. I just thought that an auditor was also supposed to give, in addition to looking at everything and stating, auditing it, was also to come up with, where indicated, some opinions.
Oh, yeah.
Okay, well, let me finish. Some opinions, well, this might not be a good idea, and I know Janet just put up the bank account. I wasn't going to bring up specifically Bank of Popular, but in Note 2, summary of significant accounting policies continued. Under cash, it says, cash is held in bank deposit investment accounts which, at times, may exceed federally insured limits. Now, if you've been our auditor for 2 years, you're well aware that for the past year, we've had, except for a minor amount, all of our money in Bank of Popular. So it's not may at times exceed federally insured limits. Should have been, after the year, you're doing it after the year, after the fact, that investment accounts which, at all times, exceeded federally insured limits. Why did you put that in here when you knew, you were here 2 years, that for over a year we've had millions upon millions upon millions of dollars in a bank, Bank of Popular, yes, in or California, they changed it to Popular Bank, but it's Bank of Popular, same thing, which when the money was put in, forget Puerto Rico and before, when the money was put in, it was downgraded by Moody's and another service, which I forget. You knew this, you're an accountant, you're an auditor. Why did you make that statement? A good statement.
Okay, you asked the question. Can you let the gentleman answer?
Why'd you
please?
make that statement the way it's written here when you knew better?
Can I answer it?
No. No, you cannot.
Please.
It's a real question.
No.
We didn't know.
Because all the accounts.
No, it's a real question.
It's a
Please,
real
please
question.
do it.
And it's
I
still
wanna
true.
hear it.
It's still true
I
because.
want to hear it from
Go
you,
ahead,
Justin.
tell
Please let the auditors.
Well, I think in that case, again, it's the judgment of management's, their financial statements, their disclosures.
So
and we
this
didn't
is
take
their
that into
note?
it.
She's saying that you wrote something that's a lie.
It's his
Let's,
statement. It's
Let's
his
let
It's-
let
we don't
him
want-
answer.
No,
Justin,
Justin, he wrote this. If you
Yeah.
didn't, let him say it.
Justin, you are
Our
not in
auditing,
charge.
when we audit, we also look at different assertions, and the main assertion with cash.
Can I have him answer, please?
No, no, go ahead.
He's the auditor. I'm sorry, I can't my questions.
Well, she came in late.
Hi, my name is Tahir. I work with Neil. When we audit, we also work under the realm of assertions. And when we conduct our audit, for cash, we confirm with the bank, and our goal is to make sure that it is existing and it's properly valued. It's not our role to look at where it's going and
But you made a
Different
note of
decision.
that. But the
This is-
specific note,
no,
where's the money?
under GAAP.
Why doesn't he stop us?
So do you not look at, it may be gap, and I understand
Yeah.
that, but do you not look at?
Excuse me, you asked the question, let him answer it, and please stop interrupting over and over again. This is turning into a debate and an argument,
Yes.
and you're not giving the gentleman the courtesy of answering the question. There are another question back. The lady in blue, Ms. Center, please.
I'll ask the question.
Identify who you are and ask your question, please.
Elena Center. I'm an owner for 34 years. I'll ask the question in another way. Would you be adverse to us diversifying this millions plus deposit and putting it into more different banks so that we have that FDIC protection?
No.
Thank you. That's what we want, is we want that money diversified so we're better protected. And you're saying you have no aversion to that?
I
Thank you.
would not be adverse to that.
And may I just ask, Joe, would you be adverse to that? Or would that be something you'd be open to consider?
I'm not adverse to it, and the board is working closely with the accounting department. We're moving the operating fund into TD Bank. We're trying to set up meetings with TD Bank to potentially set up an investment policy for the board, this board, and future boards going forward to potentially see where to put the R&R money. However, we haven't moved from Bank of America into TD Bank yet, so we're not going to move $4 million into a bank that we don't have a relationship with. Unfortunately, it's taken a little bit longer than we wanted, but that is where the transition is going, to look at potentially having an investment policy where maybe we have $4 million, let's call it, I'm rounding.
Right.
But instead of dividing that into 16, 17 banks, so each bank has $250,000 who are FDIC insured, looking at what potential investments we can have with one individual bank, so each one of them is FDIC insured.
Yeah, that's really good, and I just wanted to ask a question, if I could, because I'm the president of a very small condo association, and we have our accounts at TD, and I went there and they mentioned, oh, one of your accounts is inactive. It was our escrow account. Now, we're a very small condo association, but what I found out is if you don't put any monies in there in 9 months in an account, they will consider it inactive. And after a while, the government will take the money. And I just wanted to just put that out there as just something to everybody to think about for any of your accounts, but I was kind of surprised. I didn't realize that. But thank you for answering that for me. I appreciate
Any
it.
other questions for our audit firm?
Well, thank you very much. And again, I think as an outsider looking in, I see significant progress here at Galaxy.
The next presentation will be from Cipolla Accounting. This is Tom Ferreira. Tom, you want to use the podium?